Hey everyone, it's Julie here with TipRanks. Today we're taking a look at three big name stocks that have been pouring billions into stock buybacks. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at three companies that have been putting billions of dollars towards their share repurchase programs. But why does this matter? Well, share buybacks are a big deal. They shrink the amount of shares floating around. That can help boost the company's earnings per share, signals the company's confidence in their future, and often can help drive share prices higher. So today we're taking a look at three companies that have been putting a lot of money towards this. We'll see what it is that they do and of course what Wall Street is predicting for the stock's future. I found these companies using the stock's buyback page on TipRanks. Under the middle column in Tools, you'll find the Stock Buyback page. Here it has news regarding companies' recent share buybacks and a list of all those buybacks down below. You can follow along with today's stocks right on the TipRanks website or on the TipRanks mobile app, which you can download by following the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Let's dive right into these three big buyback stocks. First up, we're taking a look at Booking Holdings. They are a leading provider of online travel services. They operate globally across numerous travel sectors with a portfolio of brands including Booking.com, Priceline, Rentalcars.com, and Kayak. They offer a wide range of services such as hotel reservations, car rentals, and airline ticketing. They leverage advanced technology to connect travelers with accommodations, transportation options, and travel experiences. Booking Holdings is actually one of the highest priced stocks on the public market, but don't gawk at that price tag. Keep in mind that fractional shares are always a great option. The Booking stock currently trades at over $4,400 per share under the ticker BKNG. The stock has climbed over 28% in the past year, but is in the red recently, down 10% in the last 3 months. Back on February 20th, the company shared a pretty notable fourth quarter earnings report. They saw record earnings per share, a revenue beat, and just strong growth across the board. Their quarterly revenue of $5.5 billion grew 15% year over year. They also saw significant growth in key areas such as room nights and airline ticket bookings, plus strategic advancements in AI and their Genius loyalty program. Looking ahead to 2025, the company is targeting a 15% increase to their adjusted earnings per share. And of course, also in the quarter, they shared their share buybacks. And in that last quarter, Bookings repurchased $1.12 billion worth of their shares. And that is part of a pretty consistent track record here. Over the last couple of years, those share buybacks have been between $1 to $3 billion every single quarter. With 30 current analyst ratings, Booking Holdings does come in as a moderate buy with 20 buys and 10 holds. And I know we normally try to target some strong buy stocks on here, but even some of those recent holds had some pretty attractive upside potential, so I thought they were still worth including. Analysts' average price target comes in at over $5,600, which would imply an upside potential of 25%. And looking at those price targets down below, we have quite a few bumping up their price targets following that quarterly report. Like I said, some of these holds here still 7, 15, 23% upside. Our low-end price target is back in January with an upside of 3.7%, while our high-end price target, much more recent here at $6,500 for an upside of about 45%. As we head into tax season, our second company is one that you might be familiar with. We're looking at Intuit. They are a global fintech company that provides tax software. Operating primarily in the sectors of financial software and services, Intuit's core products include TurboTax, QuickBooks, Mint, and Credit Karma, which provide solutions for tax preparation, accounting, personal finance, and credit score monitoring. They aim to empower consumers and businesses by simplifying financial management and ensuring financial stability. Their stock trades just shy of $600. Under the ticker INTU, the stock is in the red overall the past year, down about 5%, and in the last 3 months have fallen about 6%, but they do currently score a 10 out of 10 on the TipRanks Smart Score. Their latest quarterly earnings report came out on February 25th. The company did see both an earnings and revenue beat, but future guidance was a little bit mixed. They highlighted strong financial performance across multiple segments, including strong revenue growth of 17%, significant advancements in their AI-driven products, and successful expansion into mid-market segments. Although there were minor challenges, such as a slight decline in the Pro Tax Group and MailChimp growth hurdles, they were overall overshadowed by the company's strong results. And they saw an increase in this quarter's share repurchases. Their total share authorization still has $3.6 billion remaining. And that last quarter saw them repurchase $717 million worth of shares. That has been increasing after a drop here back in July 2024 and does bring them over $1 billion in these last few quarters. The Intuit stock does come in as a strong buy based on 21 current analyst ratings with 18 buys, 2 holds, and even 1 sell. The average price target comes in at $722, implying an upside potential of 20%. Looking at those ratings down below, no surprise that our sell rating is our low-end price target from back in January with a downside of 11.5%, while our high-end price target is $860, which would be an upside of 43%. You guys know the deal. If you've made it all the way to our third stock today, then this is your reminder to make sure you've hit that thumbs up button. Third on our list is one of the largest retailers in the world, Walmart. As a company that needs little to no introduction, this multinational retail corporation offers a wide range of products, including groceries, electronics, apparel, home goods, and more. They operate through various segments, including Walmart US, International, and their Sam's Club, providing a combination of in-store and online shopping experiences. While Walmart is our largest of the group today with the biggest market cap, they do trade at the lowest price. Under the ticker WMT, they're currently priced at $85.90. The stock has climbed 42% in the past 1 year. It is in the red in the last 3 months, down about 8%. And on February 19th, Walmart did come out with a strong quarterly report showing both an earnings and revenue beat. They saw significant sales and profit growth driven by e-commerce improvements, membership gains, and technology investments. Despite facing currency headwinds and SG&A expense pressures, they did increase their dividend. In fact, they increased it 13%, which was the largest increase in over a decade. And while dividends are one way to return value to shareholders, so are share buybacks. And in this last quarter, Walmart reported stock buybacks valued at $979 million, getting close to that $1 billion mark, which they have hit multiple times over the last few years. In 2020, they hit a high of nearly $3.4 billion. And with 29 current analyst ratings, the Walmart stock does come in as a strong buy, with 27 buys and just 2 holds. The average price target comes in at $111, implying an upside potential of 30%. And you can see our high and low end price targets are fairly closely grouped together here. On the low end is a hold rating at $99, but that's still an upside of 15%, while our high end price target is $120 for an upside of 39%. So that is a quick look at 3 stocks, all with buy ratings and billions of dollars worth of share buybacks. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.